So if you ever skipped your own paycheck to cover payroll for all your other people or pushed off paying yourself till next month, like I said, for I did almost 5 years of that. I see you. Welcome to the Moms Makin Dough podcast. I'm your host, Kendra Hewitt, and today is episode 31 and it is week 6 of our summer school series. And this episode promises to be one of my favorites because it's one of the things that I get asked the most about. And one of the things I'm most passionate about, and that is making profit a priority and establishing the habit of paying yourself first. Now, the reason I'm so passionate about this is because if you listen to the episode I did a few weeks back, I think 2 weeks back, on promotion, you remember that I probably talked about the concept of that your business or whatever service product you provide was probably a problem for you at one point in your life that you wanted to come up with a solution. So one of the things that I'm super passionate about with my coaching is that this is probably the number one thing that women entrepreneurs are coming to me for, is like they want to pay themselves more, and or some of them, it's very common. I have women that have six-figure revenue that are not paying themselves consistently or in the right strategy. So I want to start off this episode with just a little disclaimer that I am not a CPA. I am certainly not an attorney. You would not want me to be either one of those. But I have become very passionate about just knowing the basics and knowing how to play the game when it comes to like establishing this habit of money. And today, I'm going to really give a lot of credit to the book that really did shift me the most, that I read prior to 2020. I think I talked a little bit about this on my last episode about sales and getting paid. It's a book called Profit First. It's by a guy named Mike Michalowicz, and I read it in 2019 for the first time. It is one of those repeat books that definitely changes your life. I have no affiliation with them, but I am just so passionate about that book because in 2019 I started implementing the Profit First method, and it literally saved my ass in so many ways when it came to 2020. And, I feel here we are 5 years later, and I am just really rereading and going through it with a fine-tooth comb because I have seen firsthand how many women entrepreneurs really struggle with this concept. And I was one of those entrepreneurs, so that was the problem that I had that really led me to start working with women entrepreneurs, is that teaching you how you can pay yourself more by working less. I feel like the old story of working harder, I can always hustle more, I can always make money, that ran my life for so long. And it wasn't until, like I said, out of desperation in 2019, I stumbled across the Profit First method, which I'm going to talk a little bit about today. I'm not going to go through the whole thing. Like I said, highly recommend you read that book, because it is life changing. It possibly could be life changing for you, just like it was for me. In my perfect dream world, I would love to have one of the Profit First people on my podcast eventually. I will be working on that, trust me. But I wanted to kick it off with like the last episode of our summer school series. This is little tidbits, the last 5 weeks I've covered about what I'm doing with my one-on-one or my group coaching clients. Right now I'm running a group. Like I said, we are in week 7, so we're a week ahead of you. I'm teaching a week behind all the time just so I can really make sure that I condense the information so it's digestible in a podcast format. And I want you to kind of think about this episode is that like you were the queen bee at this point. I have this image that just keeps coming to my mind of being a queen bee. And you made that money, honey, is like I always see. And I actually see a hive and I think about like this rich golden honey. And now it's time for you to make that money work as hard for you as you once did for it in your business. And I always like to tell people this reminder too, is that it's so hard to remember when we first started our businesses not our passion for it, but all of the things that you are responsible for. And if you don't build the habits, then they are harder to implement the more and more you go. Just recently, I was talking to a woman that has a med spa business and like doing well over six figures with multiple, just a couple employees. I think she had three employees at the time. And um, just really realizing that she did not pay herself consistently, and she really wanted to get started on that. So that's what we've been started working on. But I want to give you a little bit of stats here because last week I talked about getting paid, like actually collecting money during the sale and simplifying, streamlining your sales process. Let's talk a little bit about something that gets skipped way too often, in my opinion. And that's, like I said, paying yourself first. And I've looked up some stats for this episode. From the last episode, I also looked up some stats. And the number one stat I looked up is that nearly 30% of business owners, now, I don't know if this is women versus men. I don't think it really matters, but nearly 30% of business owners do not pay themselves in their first year. It's actually becoming more and more that like common in my own experience that in their first year is actually way beyond that. It's usually I say 3. I know in my personal and our practices, I did not pay myself for 5 years starting our practice, and it is one of the biggest things that, like I said, became the biggest challenge and problem that I wanted to face because I wanted to figure out, like, why how are we getting to this point in the business where I'm still not taking that paycheck home and, on a consistent basis? So think about it this way. If 30% of business owners don't pay themselves, that's almost one in three business owners that are living paycheck to paycheck or lacking a paycheck completely. And it's not typically because they're not making money, but because you're not prioritizing profit or you have a system in place for you to do so. So the second stat I looked up is the average small business owner, I think I did mention this one last time, pays themselves around $69,000 a year. I actually heard a stat on another economics podcast this week that the average salary is $75,000. Now, here's something that's come up since I talked about the stat last week is that I hail from Massachusetts. I'm north of Boston. I am an extremely other than California, Massachusetts is number 2 in taxes, in state tax. And it is an unbelievable place to live. I grew up here and I grew up in a town called Beverly, which is an amazing town. I live in the next town over now. And so feel so fortunate to this, but they just put an article and it's come up through different trends or articles that I follow in the pulse of the real estate market. And Beverly, Mass was named the number one city to live in the country. And I can tell you this, I looked up what the average median household income was in Beverly, and I also looked up the average median house price. And the average median income, I'm not gonna quote it because I don't know off the top I can't remember that off the top of my head, but I can remember the average median house price is $759,000. Now, here's what's crazy. Like I said, we're one of the highest tax states in the country, other than Cali. And on top of that, I was saying to Ryan that prior to COVID, I remember looking up that stat and it was like 4 something. So it has literally almost doubled in my memory. So if you think about the average small business owner paying themselves around $69,000 a year, that does not go very far. So I want you to just really think if you're supporting a family, if you're paying for childcare, you're trying to get out of debt. $69,000 does not stretch the way it used to. Especially when you're working 60 or 80 hours a week. Like I remember doing, both my husband and I doing the first couple years of our practice, especially when we did not have the employee in the team that we have now, the size of the team and the capacity of the team that we have now. So just think about that. And then the last stat I looked up is that 82% of business failures happen because of one thing, and that is cash flow issues. Now, when you have a cash flow issue, you can guesstimate that you probably aren't paying yourself because you're trying to figure out the cash flow issues. It means that it's not lack of sales, like we talked about getting paid last week. It's a lack of systems to manage the money once it actually comes into your business and then flows through your personal life. So, this is exactly what I really, really wanted to cover this week because, like I said, I'm not only am I super passionate about it because I think it's a super important thing. So, if you ever skipped your own paycheck to cover payroll for all your other people, or pushed off paying yourself till next month. Like I said, for I did almost 5 years of that. I see you. I see you, and here is this episode is going to be a head start on getting on the path of making a habit of paying yourself first. So it's going to be in 2 parts. We're gonna talk about how to structure your accounts, but at first I wanna talk a little bit about the step that I feel gets very overlooked at times, and it is one that I am certainly not a professional. Again, I am not a CPA, but I have started working with a team, different, tax strategists. I've probably worked with 3 or 4 of them at this point. I do have one that is one of my really good clients. And man, I've learned so much. And one of the first steps, and this is a really appropriate point to tell this story too, is that like step number one of paying yourself is figuring out if you are structured as the right entity. Now, that means this is such a dry and constantly changing, I feel like, subject. Um, Again, this is where something that you really want to take to your tax professional. And but we're going to talk a little bit. I'm going to kind of go through what the options are of entity structure because that is really important because that determines how you will pay yourself legally. So, first off, let's talk about just a few foundational principles before I get into the types of different entities. And like I said, I'm going to do a very general overview of the different types of entities and how they typically are structured based on their legal formation. And again, we're going to make this fun. I don't want it to be like scary to you, but this is so important that I don't skip this step about talking about this. But let's talk about a few foundational principles before we do that. So, foundational principle number one is that the golden rule of separating your business and your personal accounts. Even if you're a sole prop, it is a foundation of legal and smart money management. Now, I'm sure I'm going to get to telling this story at some point, but the reason that I am so passionate about the tax and the protection side, which is an episode that's going to come up down the pike, um, in as a bonus in this summer school series to finish it strong, is I got audited by the IRS in 2016. What we got audited in 2016 for years 2014 and or 2015. So it's been 10 years removed since this audit has been completed. And man, let me tell you, I did not hire anybody to help me do that. And looking back, hindsight's 2020, it was one of the most valuable business lessons I've ever learned, and it got me to the place where I am today. Again, I don't wanna kinda go into the details of the story. It's not one that's typically fun to relive, but I can tell you this, it totally set me up for how much I have continued to learn and invest in understanding entity structure, tax strategy, and, something that I hope, like I said, to bring on some specific experts that I have used to do so. This is, like I said, going to be a general um, overview. But I want you to just think about step number one as a foundational principle is to make sure that you have separate business and personal accounts. The second thing that is very, very important beyond that is that you keep a clear record of payments, whether it's owner's draw, salaries, distributions, reimbursements. One of your first hires, this is my own personal opinion. Again, learned the hard way because I did not have this when I filed my taxes that got audited, which is part of the reason. Um, should always be a bookkeeper. I don't care how much money you make. you need a bookkeeper on your team. And I can tell you this, there are so many bookkeeping softwares that you can use from the comfort of your phone that did not exist last when I did this 10 years ago. Like QuickBooks, you used to put a CD into a disk drive and actually do your QuickBooks. Now it's online. It's you can share access with other people that you trust, like accountants and bookkeepers. You can link all your accounts where it uploads them and you just need to approve transactions. It is freaking amazing what you can do with bookkeeping now. And there are bookkeepers for all levels of budgets and all levels of revenue and taxation strategies. So I highly recommend at the very least, if you don't have a bookkeeping software, you invest in one. Like I said, I'm a QuickBooks girl, but there are so many. There's FreshBooks, there's Zoho, there's so many. It has come so far. And the next thing that you want to do is, like I said, hire someone that actually is a second set of eyes on your books. And the most important part, I believe, in bookkeeping is getting what's called your chart of accounts set up. So this is also if you've been in business for 1 day or 100, 100 days and or 10 years, you should always revisit like chart of accounts in terms of like what are things that are categorizing and how are they categorizing and looking at that to make sure that your records are being kept accurately and you have the support documentation to support that and as organized as possible. This is one of the things that like I'm working on revising because we went from multiple practices to one practice to now another type of business that I'd never had before. Now we have several rental properties. So I'm having to really rework my system a little bit to make it a little bit more simplified. But that is definitely the foundation of foundational principle to remember when it comes to paying yourself first. And then the final one is one I've already said a couple times, but I just really encourage you to do. Once you have that bookkeeper, I really encourage you to talk to a CPA or a financial pro, not a financial planner here. This is a CPA. The CPA is going to, if you think of what the bookkeeper is to do, like the record keeping, bookkeeper, the CPA is to actually file your return. That's their job. And they are totally different than tax strategy, which I'm going to talk about, like I said, in another episode. Um, I wanted to keep this kind of more basic. Like I said, whether you're on day 10 of your business or a the 10th year of your business. And I find too is that like the CPA you start with will probably not be the CPA that you end up with as you start to get bigger in business and as you start to get more financially savvy. So, again, not a financial planner here. This is we're talking about taxes and legalities. And when your income starts to become consistent and or grows dramatically, which it will if you are a regular Moms Making Dough podcast listener, this is where I say that the very least, if you are going to make even $50,000 a year or that average base of 75,000, this is where you really, really want to um, interview and hire that CPA or financial pro. All right, so let's talk about if step number one is just clearing what type of entity you are. So obviously, there's lots of types of entities. Again, I am not a CPA or an attorney, so you want to consult with either one of them. But just remembering and what you are. Like, because that's going to determine how you can legally pay yourself. So, step number one is like, are you a sole proprietor? Are you a single member LLC? Are you a multi member LLC? Are you an S Corp? Or maybe you're an LLC that has what's called an S Corp selection, which is the one that I personally have had the most success with. And, or are you a C Corporation? Because every single one is going to require how you get paid differently. So if you're, for example, a sole proprietor, you take an owner's draw. You take money directly from the business, but you make sure you put it in, like I said, a personal account. There's no formal payroll required. Profits are reported on your personal tax return via Schedule C. Same thing goes with an LLC. You also can have an owner's draw unless you've elected to be an S corp. Like I said, you're not considered an employee, and profits flow through you on your personal taxes. And then let's say you're an S corp. S corp is you are required to pay yourself a reasonable salary as a W-2 employee. You can also take dividends slash distributions, um, and you are not those are not subject to self-employment tax. And you also have to file quarterly payroll reports if you're an S corp. So that figuring out what a entity type is the first step to really knowing how you can pay yourself from your business. And that's obviously very easy to find out. And like I said, easy to work with. As I mentioned when I talked a little bit about getting audited by the IRS, one of the big red flags I found out when I got audited was that I was an LLC, but had made so much more money that I didn't know that I should have opted for the S Corp selection so that we could have had a W 2 income, even though I had a W-2 income, my husband did, but I didn't at the time. So, because remember I said it took me 5 years to figure this out and actually start paying myself consistently. So, that was a really hard learned lesson, that's why I'm so passionate about making sure that everybody understands is that getting familiar with the type of entity you are and the pay structure that you can do that's set by the IRS based on what type of entity you are is step number 1. And step number 2 is gonna be setting up your 2 foundational accounts. So this is how we build your back end like boss. The 2 accounts you want to have, when it comes to your actual bank accounts, the number 1, I call them the 2 essentials. They are gonna be your operating account. This is going to be where all of your money comes into, and it's going to cover your expenses on a day-to-day basis. However, we don't pay all the expenses before we pay yourself. It used to be that sales minus expenses equal profit. In the profit first method, they teach that sales minus profit equals expenses. So it leaves you what you have to spend on your overhead. And when I say expenses, those can be everything from your utilities, your rent, your marketing, your employees, but the employees do not that does not include your payroll. Because your payroll is going to come out of the second account, which is what we call our profit account. So we have a sale come in and we automatically start moving money into our profit account. And that profit account is where you pay yourself from, and or if you don't want to take it out on a consistent basis, but I highly recommend you take at least something small out. That's something that you can really learn in the Profit First book is what type of percentages you should be taking out. So let's say you make $100. I like to start the goal for everybody should be to take 10% of every sale. I like to say that's a starting point, but I definitely have people I've coached that start with 1%. Like, so if they made $100, they put $10 in their profit account. Um, and remember, it's not about the percentages here. It's much more about the habit of starting to put some money aside to pay yourself since you took all the risk as the business owner in the first place. And this is why I call these 2 essential accounts because this is where your money momentum matters. And it all starts with building the habit. And like I said, I learned the hard way. It took me forever. And then it was much more painful because I was a little bit bitter and resentful that this business I was took so much risk to start and was working so hard in, 60s hour weeks was 60 plus sometimes at that first couple 5 years. Because remember, I talked about on the last episode is that like that 5 year mark is still a critical point of business owners is that the many people do not make it past year 1, never mind year 5. It's like I can't remember the exact statistic, but it's pretty amazing. And I think I got that from the US Bureau of Labor Statistics. And then you're gonna have what I call, your back end or your bonus accounts, right? So these are if we look at the 2 essential accounts as your basics, then we look at your bonus accounts. And there's actually another category, I'm not gonna get into it, but I do with my clients, and we call that the bulletproof, and that's where we look at building a bigger back end in terms of a vault. But in the bonus accounts, you're going to have a total of 5 accounts. So you're going to have your 2 basic accounts, your operating account and your profit account at a bank, obviously. And now there's so much flexibility with online banks. There's so many online banks now that like even have integrated with the profit first method. I'm trying to think of the name of the one that I just looked in. I think it's called Relay. And I just looked into I haven't used it yet, so I can't speak to my experience with it, but I mean, I just have it at a small business bank, in my area because for me, when I first started with this method, I wanted something that was like I could go down and I could talk to someone or I could call, transfer in. Now you can do it with an app. It's so crazy. It's easier than ever before to be able to do this. And the 3 bonus accounts, and I like to set them up in this order. But you have flexibility with them. If one is more important or if the nature of your business one is more important, you have flexibility with them. And here are the 3 bonus accounts I like to set up. Number 1 is going to be your payroll account. So, the reason I have a payroll account not only is for safety that your payroll is separated from your overhead. That way, if someone ever got into your accounts, someone once told me a story that led me to do this. And man, I was so grateful when, like I said, COVID happened and PPP happened and the payroll protection plan. And if you got that, one of the things that was really awesome was I already had this account set up. So when I had PPP, I just showed them the record of like what my payroll was. And it was all organized in one account. I didn't have to show them my whole operating account. So just really start to think about like little things that could save you in the future. So the payroll account is really this is not where your personal payroll comes out of. Remember your personal payroll is coming out of that profit account. But this might be tied to your payroll provider and you might transfer from your profit into the payroll account. The payroll account is one purpose. It is so you can hire without anxiety and not dip into savings in other accounts, which I'm going to talk about next. But I want you to just really think about this. Again, another really hard lesson learned. We hired a couple of associates before we were ready. And we didn't know how long it would take for us to break even with an associate because you can imagine they start at a higher salary than, someone that would be like, an administration worker. So, payroll is a way that I could start moving money aside for me to always know, like, hey, my biweekly payroll is coming up. I have the money put aside. So I wasn't sweating and biting off every nail I had when it came to payroll when it was due. So that's a habit that I've created. The second bonus account is our tax account. So if the number one reason that women come to me is because they wanna pay themselves more by working less, I would say this is the number one problem most women entrepreneurs run into, especially if you have not paid business taxes in the past, is saying goodbye to tax season dread. Because peace of mind, I like to say, is a total vibe, and it's one that I really personally like to chase. So, saying goodbye to tax season dread, what do I mean? What does the tax account do? Well, the tax account is where I put my money in for my either quarterly payments or if you pay your taxes once a year. So you're not paying last year's taxes with this year's revenue. Which man, that was a hard lesson that I learned over and over again multiple times until I finally figured out how to do this, where I started to estimate and work with a CPA that actually helped me accurately estimate what did I need to put in for taxes based on what I was making. It's even harder when you have a really big growth period because you don't really estimate, but a really safe bet is to start with putting 20% of your profit aside for taxes on a basic level. As you start to get better, you start to get more tax strategy. But I like to say, like, that's my baseline is 20%. Ideally, it should be even more. But so every 20% of every sale I have into that tax account. And then the final one that's gonna be your bonus is that I call is the vault. And the vault this is your emergency/investment slash investment fund. Now, in like I said, there's a couple of what I call bulletproof accounts, but in this context, when it comes to bonus accounts, the vault is kind of a hybrid model. Think surprise expenses or future upgrades, coaching, equipment, an investment of some sort in your business that's going to help you grow into the future. this is where you can dip into the vault. But most of all, the foundation of the vault is that you have a, again, peace of mind, being a vibe, is you have something to save for a rainy day, like COVID happening, or and like I said, this profit first method, having some sort of vault. I don't know if this is a current stat, but I remember reading when I was doing a lot of research on COVID and how it affected businesses, is that there was a ton of businesses that had less than 1 month of their overhead in cash. So they could not survive more than a month interruption in their business. So as you can imagine, COVID for most people was a very long interruption, if not fully, but like partially over a longer period of time than that. So if you did not have some sort of cash reserve and you needed to cover your overhead, cover your payroll, cover your, like expenses that you had associated to keep your business running, not even growing, then you were in big trouble. So that's why this is the last bonus. And I want you to think is that my golden rule on becoming profitable is this, is that every dollar needs to have a home before it hits your wallet, or before it hits your bank account. So this system, these 5 accounts, the operating account, the profit account, which is where you pay yourself from, your payroll account, which is your safe space to keep all the pay for your employees because they rely on you, your tax account so you can say goodbye to that tax dread, and finally your vault, which is your emergency slash future investment fund right now, um, is a huge, huge advantage in building a business back end that will not only make profit a priority, but it will focus on building the habit of paying yourself first. So, I like to say that the power move here too is that, like I said, banking has come so far. I used to physically do like the transfers. Now, since COVID, that is totally one blessing of COVID, is that banks have become so much more virtual, which again is, of course, a blessing and a curse at times. But you can automate the transfers either weekly or biweekly. I'm in the place now where I'm just about to start to up some of my biweekly transfers, which I assess every quarter. So you don't rise by remembering, you rise by setting up systems. So the more automation you can put into this profit first model, the better. Like I said, I don't personally use like any software or banking to do this. I personally have a lot of it automated, and I do, set time on my schedule every week to really look at these numbers. I'm actually just in the process of, because I've been teaching this so much with a lot of my clients, of really starting to refine it much more myself, and do that kind of check in with myself. But this is so, so critical for you to really start to see and build the habit of making profit a priority. So I hope you enjoyed this episode as much as I love delivering it and talking about this stuff. If you found this information valuable, please, please, please share it with someone who also might need this information. And as always, please remember to rate, review, and subscribe. And we'll see you next time on Moms Making Dough.